Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 28th of July 2023. Now, it's a bit longer than usual this week, so grab yourself a cuppa and sit back because there's some pretty interesting charts to look at. So let's get into it. First chart, as usual, is the US dollar index futures. All these charts are weekly charts. We can see price broke down from this level previously. So this is the important level in the near term. The longer term level came through here. This was the lows of the range. You can see that price has pushed just above it this week. This is an older level. And the higher level came through there, which caught this rise previously, and price pulled back from there. Now you can see the US dollar index futures were higher this week. That will put other markets that are associated under pressure, in particular currencies and also commodities that are priced in US dollars. So they face headwinds. And you can also use that as a judgment to determine how strong or weak associated markets are when they're facing pressure from a rising US dollar like this. If they're also rising, then they're absorbing the strength in the US dollar and pushing higher themselves, and that serves to be a sign of strength in itself for those associated markets. You can see that spread narrowed a little this week. Volume was about the same as the previous week, just slightly reduced. So as price is negotiating a path through this older level here and up to the current breakdown line, it's found a bit of supply being drawn out and the market has slowed somewhat. It still closed quite positively up near its highs, and it doesn't look particularly weak. There was just a little bit of supply there that needed to be absorbed. So we'll wait and see what the response is next week. It won't surprise me if early in the week, as usual, the market will test for supply a little bit. But I expect it will only be relatively shallow like this. And then if supply is found to be relatively low, I expect this market will attempt to push up to the old breakdown line here. And that would give you a bar that'll look something like this next week. Next chart is the E-mini S&P. This is S&P 500 index futures. Here's where price pushed up to the highs of the range. There was a period of consolidation and absorption through here before price broke out. You can see the market has been pushing higher consistently in a almost bullish absorption pattern. Now you've got the beginning of a zone of resistance above that begins here. You can see the market spent some time absorbing supply just below that level before it pushed through on this bar. Now I'm anticipating that there is some form of supply going to be drawn out right through this zone. But once this level up here, the highs of the range are reached, if they are reached, then the resistance will fade above this level. And you can see price is sort of grinding its way through this using bullish absorption here. It's popped through on this bar, and now it's continuing just to absorb its way through. Now, note this week that price was higher, volume wasn't excessive, and this is a market that will face headwinds as the US dollar rises. So this market was higher, the US dollar was higher. So this market has an underlying strength in it. And it was showing that strength this week. That may be why the bar is not particularly wide. It was facing headwinds, but it was strong enough to absorb that strength in the associated market and still continue to push higher. It was a sign of underlying strength for this market. And I expect this market will probably continue at least to attempt to push higher next week. Next chart is the US Treasury 10-year note futures. Put some lines in so you can see where we've been. This is the lows of the range through here at 110. Now price had reversed here and was looking quite positive, and this bar suggested supply was low down here, volume was low, and the narrow spread right up at the highs of the range also suggested that. But this week prices pulled back. It's under pressure because of the strength of the US dollar to some extent, and supply is being drawn out. You can see volume increased a little this week and price pulled back in response. While price remains within the range of that up bar, there is still some strength being shown in the market. A clear break below that level would be poor. But at this point, the market's still holding on. It's had to pull back a little bit more deeply than you may have preferred if this market was really strong, but it's holding on all the same. This is copper price futures. Now, for anyone who's interested in the Davis box theory, this is a classic chart for you. I'll mark some boxes in for you and you can see what I mean. If you don't know what I'm talking about, then you could Google Nicholas Davis and his box theory. And he effectively said that price moves in boxes, and he liked to support stocks that had traded in a box in an uptrend and then broke out above it, sort of like these did. And he would often find markets that trended higher in response. Another offshoot of that theory is that price moves in levels, sort of like rooms, and you can see some rooms or levels. If you mark it like that, you can see prices moving at certain levels here. And I try to incorporate some of that into my analysis, although I'm not stuck on one theory or another. Now you can see in this chart, just fairly quickly, that there's an accumulation zone down here. The price broke out from it, spent a little bit of time consolidating. This is an important level here. There was some consolidation through here after the initial breakout. Price moved up to this level, and there was a breakdown line here, and you can see that price wasn't really strong enough to push through. It didn't even really try to push through. If you look down here, volumes reduced considerably. There was no real intent to break out higher. The market moved into a consolidation pattern. It did break down, possibly on the strength of the US dollar for most of that. And then now we've got price consolidating again. We did note back here when it happened that strength was coming in here. And since then, we saw a buy the offer, sort of a period of buying here. You can see the volumes. And then price came back on very little volume. Then there was buy the offer again. Price came back on reduced volume. And then buying again. This is the buying here, down here on the volumes. You can see all the up volumes are high. For me, this is potentially an accumulation. We'll have to wait and see what the response is. Obviously, a response out the top and a push higher will be confirmation of that. But for me, I'm suspicious that this is a accumulation of some sort. Now, I expect there will be some supply drawn out from the left here. So if price does attempt to break out, it will have to absorb that supply. Now, some of this supply is likely to have sold out down here and isn't there any longer, but there will be some guaranteed, 100%. So that may thwart an initial breakout, but we'll see. This is looking like accumulation to me. It's unconfirmed at the moment, but that's what it looks like. Well, when the market's ready to go, it'll probably attempt to break out the top. But if not, if you follow the same pattern as happened previously, the market will do something like this next week. And then the following week, something like this. That would be another pullback on reduced volume here. And then another little push higher in buy the offer fashion. So we'll see what happens. But I'm suspicious that that's a accumulation underway at the moment, and you'll see price pop out the top at some point in the future, absorb supply from the left and attempt to go higher. Gold price futures, similar in some respects to the copper price. There's an accumulation zone in the recent background, and price broke out the top. Now you've got a line that comes through here, and you can see that the market spent some time absorbing supply to get through that level. Overhead resistance is up here in this zone. Price pushed up to that level, but wasn't able to push through. Supply was being drawn out as it was expected. And you can see down here that the volumes were really quite high. There was a serious attempt to push through, and the price wasn't able to. In the end, it failed, pulled back to this level again, gathered itself up for another go, and this time it pushed higher. You would have to expect that all this effort here weakened the resistance, and that allowed price to push through, and the market did push right through. Further supply was drawn out here, and price broke down. There was an attempt to support the market within the zone. Price pulled back again. It has gathered itself up since, and now it's pushed up, and it's back in that old zone again. That zone's pretty weak now, and price could push higher when trading conditions become more favourable with relative ease, I expect. Now, this week's interesting. Volume was pretty high. The market really traded within the range of the previous bar, and it was facing the headwinds created by a rising US dollar. So volume was the highest volume for weeks, right up to here. So really, you could have expected that this market would push down like this with an increased spread and closing low, because volume was really high and the market was under pressure. But it didn't do that at all. The market held on really strongly at this level. The market was absorbing the supply drawn out in the market, and it was absorbing the strength in the US dollar and holding on adjacent to the previous bar. You've now had 3 closes, all at a similar level. This market's showing you an underlying strength, and that strength will be shown at some point in the future when trading conditions become more favourable, and it will accelerate higher. Most likely when the US dollar either moves sideways or begins to fall again. At some point it'll move lower, even if it's just lower for a few days. And that will then take the pressure off, the headwinds ease, and this market looks ready to move higher when trading conditions are more favourable. Silver price futures trade similar to gold to some extent, but with more exaggeration. This market is more volatile than the gold market, and you'll often see exaggerated moves in this market. There is an old accumulation pattern in the recent background. You can see the breakout here. Here's the overhead resistance, similar to the gold market, and price moved up to that level pretty rapidly. It wasn't able to push through. Similar to the gold market, it pulled back to the old accumulation zone, gathered up a bit more strength, and then had another crack at moving up to the resistance above. And this time it did push through, or at least up to the highs of the range. And then similar to gold, it was facing some headwinds from the US dollar strength, and price pulled back into ranges there. There's a big gap there. This bar here really looks like this. Now, 3 weeks ago, prices pushed right back up. It's closed back above the highs of this range. I'm marking the range at the close of this bar and the highs of this bar. That's the important level through there. And it's consolidating right up in the highs of this bar's range, right up here, like this. Now, the higher a market can consolidate within an up bar's range like this, the stronger it is. Now, this is not complete yet, it's incomplete, and maybe we'll see the market need to pull back more deeply, but you can use this as a judgment call. If I just clear this off so you can see more clearly, if the range is from here to here as price moved higher, and this is where the market is attempting to consolidate at the moment, if you take the 50% level of this range, say here, if the market can consolidate and then push higher from the 50% level or higher, it's considerably stronger than if the market has to pull all the way back to close to the lows of the range before it can overcome any supply that's drawn out in response to the rise in price before it can move higher again. Use that as a way to judge the underlying strength of a market. If it can consolidate and absorb the supply that's inevitably drawn out when price rises over a relatively short period of time, it's far stronger than a market that has to pull right back quite deeply before it can buy all that supply that's been drawn out. So keep that in mind as a way to judge the underlying strength of a market. And at this point, this market is showing you underlying strength by only pulling back in the top quarter or third of this range at this point, despite the strength in the US dollar. So keep that in mind. This market and gold are looking stronger than weaker, and copper, it looks like it's got accumulation in the background. So you've got all three commodities here showing you strength. Now, it's only unconfirmed strength at this point, but it's there to be seen, and it will likely be confirmed in the future when we wait and see. Okay, next chart is light crude price futures. And this is another market that's shown relative strength in the face of the US dollar moving higher. Right, there's the lines on the chart that are most important. You can see that this level here, this zone, this highs of the range have been important. They've stopped the market moving higher for weeks and weeks. Now you've got a little mini range inside just here, and price recently pushed above on this bar here, consolidated for a week on that bar, and this week it's pushed higher and pretty much up to the highs of the range. And this has been a pretty determined move higher over the last 5 weeks. And prior to that, price just moved sideways. Despite some supply being drawn out, that was absorbed and price only moved sideways. There was a few threatening bars that looked like price might move lower, but the market each time absorbed the supply that was drawn out, and price didn't really break below this $70 level. And now price, in a determined fashion, has ground its way up to the $80 level, despite there being a rise in the US dollar. And this market is priced in US dollars, so it was facing headwinds. This is another market showing you an underlying strength. Now, whether this strength will continue to be shown and price breaks out above the 80, or whether price moves sideways from here, we'll have to wait and see. But at this point, this market is showing you an underlying strength. Now, if there is a breakout above the highs of this range, I would expect there'll be some supply drawn out from the left here. I expect that what supply was in here has partly sold out down here, because that's a fairly long time ago. That was late last year. But there will be some supply there for sure, no doubt about it, and that will cause resistance to the market. Same with if price pulls above this breakdown line here, I'm expecting there will be some supply drawn out from the left here as well. Now, it may not be as strong as it would have been if it was more recent, but there will be some there no doubt about it, and that will cause this market some issues. At this point, it could move sideways at 80 pretty comfortably now. There's been a determined rise in price. There may be an attempt to break out and just test to see how much supply is actually here. And if there's not much, maybe we'll start a new range. But that remains to be seen at this point in time. Just keep in mind that the commodities, copper, gold, silver, and crude, have all shown an underlying strength in their markets despite a rise in the US dollar, and that's important. Next market is Aussie dollar currency futures, and you can see the market's been trading pretty well sideways for a considerable amount of time. I pointed out that there may be an equal and opposite reaction here at the time, and that's exactly what we got. Then on a bit of weakness in the US dollar, price pushed out and looked as though there may be an attempt to break out. But since then, the US dollar has risen for 2 weeks in a row, and this market has moved back within the previous range in response, which is exactly what you would expect. And I do expect the market will continue sideways. I think the US dollar will find a little bit of resistance above, and that should put the floor in at the 66 level again. It remains to be seen, but that's what I expect. And that'll keep this market trading pretty much between 66 and 68 cents. The Bitcoin futures. Bitcoin futures for me have an accumulation in the background. That's through here. Now, this was a bit of an unfortunate occurrence that had to be absorbed when it happened. It wasn't actually an intentional part of the accumulation, I don't think. I think the market would have continued trading through here. But the market had to contend with this issue as it occurred, and the accumulation just continued once it absorbed the weakness that occurred there. Now, price has broken out from the accumulation zone, come back, tested its strength, made a secondary attempt to break out, but it began to draw out supply. You can see down here the increased volume. It looked like it had eased here, then volume increased again there. Last week, it looked like the volume, the supply, had reduced again, and that would leave it in a good place to push higher in response. But this week, it appears that supply has continued to be drawn out. Spread was relatively narrow again, considering the high volume, which is the high supply that was probably being drawn out. That's selling pressure, supply. So the market is attempting to absorb that supply, as it has done for 5 weeks. But 5 weeks for a consolidation pattern is getting a little bit long and suggests that the supply is ongoing. It's not going to go away at the moment. It can't be absorbed easily. When that happens, there's often a challenge to the sellers, and that will usually come in some form of shakeout. Now, that may be a shakeout like this, where the market rams down lower and threatens that the sellers are going to miss out on the current high prices and encourages them to sell. And then once the sellers are done, the market springs back pretty quickly and closes pretty much where it began. Or sometimes it will happen over a number of bars. Say it was 2 bars, it would look like this. That would be a shakeout, in this case over 2 weeks. Or you'll get a really deep pullback like this, then you'll get an absorption bar like this, and then an attempt to push back up after the supply has been absorbed. It'll look more like that. So keep in mind that supply has been ongoing for 5 weeks now. So keep in mind that price has been in consolidation mode for 5 weeks now in response to this up bar. And that may be a little bit longer than you would like. And supply appears to be even higher this week than it has for the previous month. So I think there's a fair chance you'll get a shakeout of some sort here, or some sort of challenge to the sellers. And we'll mark it like this at the moment, but it may be over a bit more of an extended period of time. And that'll be determined on how much supply is drawn out when price does pull back more sharply, because that's going to threaten the sellers and encourage them to do their selling and get it done. So just beware of the shakeout in the near term if we continue to get ongoing supply drawn out in this market, because something will happen for sure. And it's unlikely the market will just attempt to ram itself higher and absorb the supply as it goes. You see that sometimes, but that's generally not sustainable. If the market does that, it'll ram up and then it'll come down just as hard. And that's not normally a sustainable way of doing it. It does happen from time to time, and from time to time it is sustainable, but it's usually not. Generally what a market will do is shake out and then test for supply. And then if the supply is found to be low, it'll push higher and it'll be more sustainable. Back to the US dollar index futures just quickly to finish up. This has possibly been a bit of a longer video, but I had a bit more to talk about this week. Here is most recent breakdown line, and there is likely to be supply being drawn out from the left if the market challenges that level. Here's the lows of the old range, which price overcome this week. And that'll make this actual 3-bar setup some form of shakeout itself. I'm not convinced it's been engineered, it's been organic, it's naturally formed, but it will still have the same sort of response if that's what it proves to be. And confirmation would come from a clear breakout above this breakdown line here and push higher in response. You may get a test and then a push higher like that, or you may find price just rejects here and is unable to recover back above this breakdown line, and then a break below that level would be a confirmed rejection, and price would then continue lower in response. So we're at a pretty important level here, and that level is 101.825, 101 3/4 we'll say. That's that breakdown line there. What price does at this level is going to be important. It's going to be important for a lot of the other markets. If there is a rejection and price then moves lower, all those markets that are showing underlying strength, the copper, the gold, the silver, the light crude, and the Aussie dollar, and the E-mini, they'll all go higher in response. If this market breaks down, they'll have those headwinds taken away, and they're all showing an underlying strength, and they will at least attempt to accelerate higher in response. So what happens in the US dollar in the near term is pretty important. If it breaks out above this breakdown line, then those markets are going to continue trading sideways and be under pressure. But if this market rejects that breakdown line and starts moving lower, initially it'll only move back to these levels, but if those levels were broken, these markets will all accelerate higher with real vigour. They may even start accelerating higher as soon as any rejection appears likely. We'll just wait and see. But that's what's happening. It's all pretty interesting. Thanks for tuning in, and I'll see you next week. Thank you. See ya.